Hey everyone, this is Joe Hentges with Beyond the Chart, and in this technical analysis of the stock market video, we're going to take a look at the market here over the last week or so and why the market is telling us that there is no fear. So stay tuned. All right, let's start off here with the S&P 500. We're going to look at the S&P, the SPX on a weekly basis. And here's the way it looks. We've had a strong 2-week move up in here. Up 26.95 for this last week. We are at a closing all-time weekly high. So on a weekly basis, this is actually an all-time weekly high. But from an intra-week or intra-day basis, it hasn't gotten there yet. 2129.9, and the high was 2131.74. We got to get over here and take out the side. We're very close. I do talk about a lot of this in the post this week. Check that out at joehentges.net right here. Head on over there if you're not there and check out the post. So what I talk about in there is the fact that since we made this all-time high back on May 22nd, 2015, we've made 1, 2, 3, 4 runs at it in the last little over a year and have not taken out the high. Now here we are again close. Are we going to do that? I got a feeling we're going to find out this week, at least, one way or the other, I think. So that's the picture. This is the only wave count I've got. I'm still holding it because I'm not changing it until unless the all-time highs are taken out. And all of the indices are not giving the same exact picture. Look at this picture on the New York Composite. And this is a much broader picture of the stock market. Let me rescale that a little bit for you so you can see what I'm talking about. Let me zoom in again. So you can see here's the May 22nd, the week ending May 22nd. And by the way, it's the same thing I was talking about on the SPX is the week ending May 22nd. That's where the all-time high is. We're not even close. We're at least 6% below that all-time high as of the close on the New York Composite. And again, as I've mentioned many times before, this is a much broader indice. So I think a much greater indication of what's really going on throughout the stock market. So we'll continue to watch this, continue to see if it continues to push up or not. I know that the Dow and the S&P 500 are very close, but the New York Composite, the NASDAQ, and the Russell 2000 are not nearly as close. All right, let's take a look at the VIX. I'm going to look at the VIX. Here's where we're talking about fear. The VIX is known as the fear index because it talks about the premium that gets put into S&P options, put and call options on the S&P 500. So this is closing at 13.20. Why do I have this line in here? This line indicates that this is where the close is. And we've had 2 daily closes since August of last year. Only 2 days that closed lower than the close we got on Friday. So there's no fear in the market right now. And when did it have this same kind of thing? Remember I just talked about the push that it made July, August. That was the first push to try to take out. Here's the the week of May 22nd. And down here at 12.13, we're at 13.20. So here's the little cluster at the all-time high. Here's where it tried to take it out again, but did not. Here's where it tried to do it again in November, but did not. Here's where it tried to do it in April, but did not. And same thing in June, in early June, but did not take out the all-time high. So here we are back again. So maybe 5th time will be successful. We'll find out. But right now, in terms of, market extremes, we're at an extreme in terms of no fear in the market versus these peaks where there was a lot of fear, especially back in August of 2015. All right, so that's the picture on the VIX. Let's take a look at the 3 ETFs that I like to look at for indications on the economy and so semiconductors, home builders, and the financials. So 1 out of these 3 is pushing to a higher high here over the last term. Now we had this peak. Again, this is the May 2015, this high. So we broke above this high here, and we actually pushed above it here. So the semiconductors are indicating that maybe they're turning higher. They have not taken out the all-time high yet on SMH. Okay, so that's the picture in here that we continue to watch. But when you look at the other two, when you look at the home builders, they are not even close. They're not doing that yet anyway. And, you know, we've had a series of trend lines. This is longer term trend line. This is a little shorter term that have been broken. We got the pullback to it. And now you can still see we have a series of lower highs in this picture and lower lows. So the home builders are not confirming the market action, at least not as of yet. And the same thing on the financials. Now you got to look at this and see how these higher highs are in place here. And here's the rally in the financials. Yeah, it's been, you know, nice little 2-week rally, but it doesn't look like it's going anywhere. I mean, it barely took out, this week's rally barely took out the high of the previous week. And it still looks like a whole series of lower highs over the last 5 to 6 weeks. Let me go back to the home builders. Yeah, the home builders looks a little bit stronger with this last week's move, but again, it didn't take out this high or this high here. And the last thing I just want to touch on this week is just a picture of the Baltic Dry Index, because the Baltic Dry Index is an indicator. It's a reading of the rate that's being used for shipping by the London Baltic Exchange, the shipping around the globe. And it's a great indicator as to how strong the economy is. And it also is an indication of, you know, the how many, you know, big ships, container ships and that type of thing are out there. But it is an indication of what's going on with the economy. And you can see we had this all-time low in February of 2016. Yes, we bounced back. And here's that April move in the market. Also, I mean, here's where the market made a move in April. We're not confirming that right now on the Baltic Dry Index. And we've never, this whole picture is just a series of lower highs and lower lows. And so when I talk about, see this December 2009 low in here that was smashed in 2015, a little over a year and a half ago. Well, what's this dotted line here? This dotted line there is the all-time low from July 1986. So that was also smashed, you know, a year and a half ago. And yeah, we did get a bounce back, but then we just came right down and just cratered right through that at the end of last year and into the beginning of this year. And you can see how bad and how low this got. So yeah, we got a little bounce back. Well, we had a bounce back here too. We had a bounce back here too. Same thing here. But the whole picture is not a very strong global picture by any means. So that's the picture on the Baltic Dry Index. Yes, we're at whisker away from all-time highs on the S&P 500 and the Dow. We'll see what happens this week. See if the fifth time is a charm on the push on the S&P, and continue to watch the other indices. But right now, there is no fear in the market. All right, everyone, head on over to the website. Check on the website if you're watching this anywhere above my website. And if you're not a subscriber, subscribe so you get notice of when I publish new videos. And if you thought the video was helpful, please hit the like button. Thanks for watching. We'll talk to you on the next video.